Good morning, guys, and welcome to Bears and Bulls. This is going to be our third tutorial on trading strategies. Today we're going to cover what I call my big dog strategy. Um, we've talked about the first two. Our first one was our bungee cord strategy. Our second one was our momentum strategy. And the third one is called the big dog strategy. And it really is another play on momentum, but with a few differences and using a few different signals. This is our least riskiest strategy. This is the one I'm the most confident in long term, and I really like to use this one with probably the majority of my investments. Probably 50%, 60% of my investments are using this strategy just because I'm comfortable with it. So let's go over it quickly. Um, First of all, the this strategy here uses your big name stocks, your mega caps and your large cap stocks. If you're not sure what mega caps and large caps are, just do a quick Google search and then go pick out. You could just simply take the top 10 NASDAQ stocks and the top 10 Dow stocks, and you've got your 20 stocks you're going to look at right there. And that's fine to do too. You can just research those, or you can go through them and cherry pick a couple out if you've got a little bit of experience. Um, and what I've done here is you can see this is my list: Alibaba, Google, Apple, Amazon, Broadcom, Home Depot, Costco, Meta. What's that one? That's BlackRock, Blackstone, Microsoft, Tesla, AMD, and Nvidia. And so those are the ones I just tend to use. I like them because they're very there's volatile, so there's lots of up and downs in there, and I do like the volatility to try to capture some gains above the average market. They're also heavily tech weighted, with the obviously with the other than eight Home Depot, Costco, and Blackstone. Home Depot and Costco would be more consumer discretionary. Everybody knows what those are, and Blackstone's an investment company. And so maybe I should add a couple more, like McDonald's and maybe a bank in there, J.P. Morgan or something like that, just for consideration when I'm doing the buying. And so what I'm going to do is currently these are what's in my portfolio: Alibaba, Google, Apple. Then I set up a secondary set of stocks that I just from reading and talking to people about, and I think have opportunities to do something there. And these would be more of the large caps, maybe a medium cap. I'm not sure, but these are ones that I just want to sort of keep my eye on, and I'll pick up a couple of these here and there just when I have some available funds. And that would be Super Micro, Dollar General. MU is Micron Technologies. I really like that one, and I'm going to be buying that one actually very soon. Zscaler, which is a heavy tech company. Robinhood trading, online trading, and Nucor, which is it's a new bank model. Um, that's very interesting, that I think will be very successful long term. And then again, I'll throw a couple of stocks in there that I think this I really like the sector, and so this has nothing to do with the size of the stock. These are mostly to do with the size of the stocks, and ones I've heard about. These are things, Oklo and Hut 8. So I've got crypto. That's my play on cryptocurrency. Is Hut 8. Oklo is my play on nuclear, small nuclear reactors. Um, I think energy, as we move forward in this world, energy will be something. Alternative energy will be something that it will be undeniable. It will have to be invested in, and I think Oklo and another one, SMR, work with small. I think it's, I don't know what it's called. Anyways, it's miniature nuclear reactors that they're able to be built and put on site. So you could, if you're Ford, instead of buying all your electricity through the utility company, you buy a small nuclear reactor, you put it on site, and that powers everything. It powers it more efficiently, more cost effectively, and that's going to be the future for sure. They're already doing it in China. They're already well ahead of us on that one. And Coin is another play on the cryptocurrencies, Coinbase, and I probably only need one of those. I don't need both of those, so I'll probably I'll get rid of one of those. Probably what eight Coinbase 350 188. You can see they almost track each other, so you'll see a lot of these. I'm going to pull up Hut 8 here because you'll see a lot. What I try not to do is have the same stock doing the same thing. And you'll see here, I'm just going to put Hut 8 as a comparison to Coinbase. So Hut 8 is I'm just going to make it so you can see it a little bit better. Let's make that a yellow line. So you see what it does. There's a yellow line. And so Hut 8, oh, I'm sorry, jeez. I'm just having my first coffee. I need a little bit of a break. Coinbase, when I put it up, will is the yellow line, and when you track it, you'll see a very similar pattern. When the regular Hut 8 goes up, Coinbase goes up. When Hut 8 comes down, Coinbase comes down. It's a very, very similar pattern. So it doesn't really, it makes no sense to be investing into both of them. There's a lot of stocks that the sector will move up and down, and everything within that sector will generally move up and down. You'll find that with the banks. You find that with crypto a lot. You find that with you find that is in the chip sector, in Nvidia and AMD. Everyone talks Nvidia, and so I probably will get rid of one or two of these too, because when Nvidia goes up, SMCI goes up, and AMD goes up. Intel would be the exception right now, and I'm heavily invested into Intel because of the hey, where's my Intel up here? Oh, it's down here. I'm heavily invested into Intel right now, just because of what's going on with the situation in the United States, and I really like what the guy running the company's doing. I like that he is working hard with Trump to make that an American, really an American, rah American company. So we'll see what happens there. So what we want to do here is we have all our indicators. We've talked about those. You've screenshotted those. You have set these up on TradingView, and that's what we're on is TradingView. You've got all those. We are going to go, let's take Google as an example. We are going to pull up the 1 week chart. Okay, so on the really big companies, we are working off of the 1 day chart, the week and the 3 day charts. And this is how simple this strategy is, guys. When you got all this, you're going to have your gray buy signals and you're going to have your blue sell signals. That's basically all we're using in this one. So you can see, let's go back quite a ways here. You can see what we're doing here is we can look at all this and maybe it'll help us make a decision if we're not sure, but all we're doing here is looking for a gray buy signal right there. We're in. We're getting a sell signal. We're out. Buy signal. We're in. Sell signal. We're out. Buy signal. We're in. Sell signal. We're out. And what that's doing is a couple things, guys. Once again, we're riding momentum. So you see this one here. It looks like a little bit like our momentum strategy, where it's moving from pink into the green. So we love that. Then we get that double. Light blue, light green up here. So now we start getting a little bit weary. And that's certainly an area that you can get out if you wanted to, or you could trim your position. And again, these are general rules. You need to sit down and work out what's best for you on this stuff. So you could certainly trim some position around here if you wanted to. And then when you get a signal like that, you just sell. It's not going to work all the time, but the great thing about this is you prevent and save your capital. Again, riding it all the way down there is just silly. There's no reason to ride it all the way down there when you're getting a sell signal here. So in this case here, I would have bought in at 51. I would have sold out at 58, 59. That would have been a 4 month deal, a 4 or 5 month deal. So I would have made 15% of my money. And then I would have gotten out and I would have ridden it down, ridden it down, ridden it down. And you can see momentum strategy. We're not getting any signals, no signals. Um, we might even buy it on the way down. So because we love these stocks so much, they're so big, they're not going anywhere. Is that anything below 59 is a great buy point. So you could buy a little bit at 55. Maybe you buy a little bit more at 52. Maybe you buy a little bit more at 49. And then we get a buy signal here and you put the rest in at 54 or 52. So we've probably averaged in all the way around here. So that's fine. Or just wait for the buy signal and buy it. And then we ride it from 52 to roughly 59 again. So that's 19. That's 5 months. There's another 20%. You say, well, you're only invested for 4 months of the year. Well, you made 18, 19, 20% in 4 months. And the idea of this is that once we get out, we're going to go find another big stock to put our money into. So it's not just sitting on the sidelines. You're either reinvesting it on the way down here, or you're finding another stock that's hitting a buy signal and putting it into there. So if you're doing 15% with Google in 3 months, 15% with Home Depot in 3 months, and then you jump over and do 15% in Tesla with 3 months, all of a sudden you've got a 60% return on that small investment piece over the course of a year, and that's with really high quality, high quality stocks that you have super confidence in, that you're never going to be fully out of, because they're always going to come back, even if like Apple took a dive. Like look at this dive in Google here, and so even when this happens with Google, people are panicking at 74 down to 53, and they're panicking and they're getting out. We're not panicking on this one. Like we're just not panicking. Google's not going anywhere. Like never. It's just not going anywhere. And so we don't mind sitting on the 73 down to 53. Say we get caught and we whatever, we'll ride it down to 53. We don't care. We know it's coming back. We'll buy a whole bunch more down here at this buy signal to average in at a better price, and then look what it does. So. And you can see time and time again, it doesn't always work, but you can see time and time again, there's a buy, there's a sell. In at 56, out at 77. That's 8 months. Nice gain. You'll get times where you don't get the gain, and that's fine. Like, here's another one where you're getting it. This is what we're looking for, is these kind of rides here. Like, ultimately, that buy right there, that's the ride we're looking for in all these stocks. We're going to get them every once in a while, where we're going to ride it from 79 all the way up to 145. And then we're going to get times like this where we buy 1 week and the next week we sold it. We bought this week, 2 weeks later we sold it. But we're protecting our capital. We just took here a massive 40-50% gain. We took a 5% loss. We take a 5% loss. We're in there and we're out there. We take a 5% loss. But what we didn't do is take that loss on the way down, or this loss from 104 down to 86. We weren't involved there. And so that's a way of preserving capital and looking at a positive trade. Sometimes it's not being in the trade. That's important. Okay, buy here, sell here, buy here. So, another 5% loss. Big deal. Because then we get this. 100 all the way up to 181. Okay, so we took some small losses in between, but we went all the way from 100 to 177 in looks like a year and a bit. Another massive gain, and that's what we're after. So go ahead and practice these with all the stocks that you want. Shoot me a message if you're not sure what would qualify as a big dog stock. Again, you're looking for your mega caps and your large caps. If you don't know how to find them, just let me know and I'll show you. Hopefully you're playing with TradingView a little bit. Once you're into Google, you can scroll down here and get all kinds of information on Google. where it is, and this area right here will show you if it's a mega cap. Its market capitalization is 2.51 trillion, and anything over 100 billion qualifies as a mega cap. Um, and hopefully you've had a chance to play with TradingView a little bit. When you go into these things, you can go in, get their financials, you can get their stock recommendations, tells you a little bit about what's happening with the stock. And we're gonna have some, we're actually gonna have some seminars on this stuff to get into a little bit more of the details and to look at a stock quickly and get a general idea of what the quality is in their financials. Again, nothing details, and I don't do the details because I'm not good enough. I don't know. I'm not. I will never know as much about this financial information as the guy that runs the company or a professional analytics guy. Um, I have two or three things I look at, and that's it. And that's gives me some confidence with the actual company itself. Again, we're technical trading, so um, you know we don't really care about this other than with this big dog strategy is we want to know that these companies aren't going to be going anywhere soon, and they're not going to be, but we can look at some numbers just to make sure. We want to make sure that sales and revenues are increasing like we see here with Google. um, and you can see it's light blue is probably, light blue, what's light blue? Google Cloud is doing portions doing very well. The Google services are still doing very well and increasing, and that's not even talking about things like self drive and healthcare and other stuff that these guys are into. Um, so, anyways, we'll deal a little bit about that later. Also on this chart, you can see we draw our. I'm not sure if we talked about this or not. So um, what we do here is we try. I always draw trend lines on my charts, and I'm a big believer that everything will average out at the end of the day. And you can see with any stock chart here, I'm going to clear it off. With any stock chart, just clear this off, guys. Over a weekly period, you'll always find a trend. Always, always, always. And look at this. This is Google. Like you can't you can't draw or find a better trend than that. Since it started back in '08, it has always, 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 with the exception of a little blow off top here, stayed within its trend line. And these trend lines work. I'll put a middle one in there with every stock, and I love to see where they are because in the trend line, it just lets me know what kind of value. When at the bottom of a trend line, I love it. I just love it when it's all the way down here. You might get stuck in that pattern down there, but you're gonna grab that 87 move to 182. When it's down here again, you're gonna grab that 53 move to 147. And that's what I love about these stocks when they get down towards the bottom. You're going to grab that $14 move to $30. And I love it when it's down there. And I've done that with Amazon several times. Very Had a lot of luck with that one. So you can see the Amazon has a similar chart. This one should probably be like that. And you can see for the last little while it's fallen out of favor since back in 23 to now. It's kind of fallen out of that trend line. And so it's either starting a new one just below where we would take this, and this was sort of becoming a new trend in that area. I don't believe that, though. I think it's going to move back up. I think we're going to see a very sharp increase. Get rid of that. My belief is we're going to get a move, something like, they got a couple things coming up, which I think is going to be great. I think we're going to get like a move here and something like that. So I think Amazon's a great opportunity right now. We're just going to wait for our times, and we're going to be using, let's take a look. We're going to be using this So you can see Amazon went to a buy in May of 25. If that was one I was interested in at that time, I would have bought it. I probably bought something else, but it's still certainly not too late. So I might actually buy a little bit of Amazon today, and ride that one for a while. You might get caught short. Like who knows? Like here's Amazon moving up. Say I didn't start looking at Amazon until here. Well, 227, and then I got a sell signal at 215. So I jumped on the train. Unfortunately, it was already near the top. Um, or I can just wait again. Or if you want, you can bump down to the 3 day, and I'll often bump down to the 3 day on the stocks that I really like Google, Alibaba, Amazon, and these. And let's just see what we can find. So instead of being on the week, we can buy on the 3 day. And buying on the 3 day and selling on the 3 day gives us a little bit of a different view on things. Um, so let's just see if I can find one that's. Oh, Tesla, yeah, Tesla. Okay. I've been battling with Tesla here for a while. I've done very well over the years, but you can see that we got a 3 day buy signal on Tesla right here. And since then, it's kind of bounced in that area. We haven't got a sell signal yet, but it's just bounced in that area. So it's got two ways to go right now, obviously. Uh, I drew those little trend lines. You can find trends if you want to do some research on finding trends and drawing trend lines. When you know what to look for, you can find these trend lines all over these charts. And you'll see that I've drawn a triangle here, so it's in a bit of a triangle pattern. And you can see that triangle pattern is getting smaller and smaller and smaller and smaller. And that's a perfect example of a trend that we're looking for. And so the idea here is that as it gets small and small and small towards the end here, it's going to go one of two ways. It's going to go through the bottom, try to come up, not make it, and just keep going down, or it's going to do the opposite where it goes up, it comes down,